Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very good day of trading and a very beautiful 4th of July holiday as well. And in today's markets, guys, well, the bulls continue their absolute complete domination over these markets. One of the concerns that we had over the past couple of weeks is that the market was not broad enough. Well, as the rally continues to move on, at least this week, we've seen a notable shift in that. The market's now providing a lot more breadth than they were just a few short weeks ago. So in today's video, guys, we're going to recap a few things together. Number one, we're definitely going to go over the non-farm payrolls jobs data report that came in early this morning that helped give the markets a little bit of lift. Second, we're going to take a look at our regular technical analysis, guys, in terms of our major index rundown here, and then dive into our big tech names list. And lastly, take a look at my portfolio to see the trades made for the week and how we performed. So without further ado, guys, a lot to cover in today's video. Let's jump right into it. So as you can see, SPY up about 0.58%, very healthy day there, and QQQ another 1% day to the upside. A lot of our big tech names, guys, hitting new all-time highs, especially Meta and Microsoft just continuing their advance. Apple as well hitting new all-time highs today. Very beautiful day for big tech as a whole. A lot of your major players, guys, continue pushing up in the green. A little bit of red here in semiconductors, but AMD continuing their little bit of a rally after being left behind in the group for about the past month and a half. All in all, though, guys, relatively good day of market performance. The market was fairly broad here, even financials and healthcare participating in the rally, even though financials was a little bit down because of your bank's performance. Nice to see the credit card issuers are finally coming back in motion. Healthcare, a decent day as well. Now, take a look at the one day relative here on the bar charts. You can see that most of your major indexes were indeed green on the day. Only lagging behind were financials, industrials, and energy. And on the 1 week relative performance, guys, you can see the market finally broadening out to well over half of the entire sectors, right? Only, once again, utilities, industrials, and healthcare being left behind this week, but some beautiful performance by the top half of the market nonetheless. So before getting into more technical analysis here, guys, let's take a brief look into what happened for the non-farm payrolls jobs report that came in fresh this morning. You can see the expectation was to add about 190,000 jobs to the economy and came in much better than expected, around 206,000. So let's dive into the gist of the nature of the report right here. So as you can see, U.S. economy added 206,000 jobs in June. Unemployment rate rises to 4.1%. Now, 4.1% is a rounding. If they're just rounding the number here, the actual number was 4.054. So really not that much higher than last month, which came in pretty much at 4% flat. Now let's get into it here, shall we? So monthly job creation in the US, you can see that although we are, yes, off of our peaks of pretty much 2022 and 2023, we are still adding a healthy amount of jobs in the economy. Definitely no major red flags to speak of just yet. Here's what some analysts had to say about the matter. It's a soft landing kind of report. Now, this does support the idea that the Fed will cut relatively soon, and we continue to think September is the most likely. Talking about this jobs report here, guys, we're trying to find the Goldilocks scenario here, where the jobs market and the economy doesn't cool down too much and also isn't too hot. So the Federal Reserve can just come in with an accommodative rate cut rather than a reactive rate cut because the data is bad, right? So Goldilocks scenario still definitely on the table. U.S. unemployment rate rising from 4% in May to about 4.054%, rounded up to 4.1 in June. Now, it does appear that we're on a little bit of an uptrend here in terms of unemployment, but when in doubt, guys, just zoom out. Here's your unemployment rate for pretty much the last 60, 70 years at this point, and you can see we're really at the lower bound of the spectrum. If we were to zoom in right here in the last roughly about 15 years, let's just call it, you can see, guys, we're really still towards the lows, so I really wouldn't be too nervous about this tiny little slight uptick in unemployment. 4% is still a very, very solid rate for long term if you just zoom out and have a more long-term view, right? So very, very decent unemployment rate there. No major red flags to speak of either. On wages, average hourly earnings increased 0.3% for the month and 3.9% from a year ago, both in line with estimates. 3.9%, guys, why this is important, we have to look at CPI. As long as your average hourly earnings is gaining faster than the CPI, than your inflation is gaining on a yearly basis, consumers are regaining purchasing power. So here you have it, the monthly report from CPI in May. You can see 3.3% on average, and our average hourly wages are growing at 3.9% on a year-over-year basis. So consumers regaining purchasing power, albeit slowly, but they are still gaining. At least we aren't losing any purchasing power, right? So that is still a very good thing. Now, in terms of another further few quotes from some analysts here, the jobs market is bending without yet breaking, which boosts the argument for rate cuts. Things are not too hot and not too cold. The Goldilocks is here, and September is in play for a Federal Reserve rate cut, which is said by David Russell, Global Head of Market Strategy at TradeStation. Now, at their most recent meeting, policymakers indicated they need to see more progress on inflation before lowering interest rates. This we know. They've been saying that for pretty much 5,000 years at this point, right? While nothing that strong economy, and in particular a solid labor market, lessen the urgency to act anytime soon. Once again, this has also been the argument for quite some time. If the economy and the jobs market is not too bad, it just doesn't develop any sense of urgency for the Fed to cut just yet, right? So here's a further breakdown. There are no cracks here that would cause the Fed to rush to the rescue with rate cuts. And the labor market is in line with a continuation of slowing inflation. This is true. That would lead to 1 or 2 cuts this year, which is pretty much the expectation. So all in all, guys, very decent jobs report, very decent unemployment rate as well. No major red flags in the economy and no major red flags in the jobs market just yet either. So all in all, very good, which contributed to our equities just continuing to push higher on a day-to-day basis, looking extremely strong. Now let's dive into our technical analysis for the SPY, and you guys will see not much has changed. So we're going to go through these quickly and then tackle our big tech names. So SPY, really beautiful daily uptrend right now, right? Tightening range at the top and now blowing above, setting a new all-time highs. So the bulls are in absolute full control right now, guys. Nothing to say whatsoever, right? Beautiful daily uptrend. As soon as this move is topped out, we're going to be looking for an establishment of a higher low, anything pretty much above 543, looking for that daily higher low for the trend continuation. Keep an eye on your prior all-time highs, which could be lining up with the 12 EMA coming in to retest that zone right there at about 549. So all in all, guys, the SPY bulls are in absolute full control. And let's say for all intents and purposes that they lose that control and set the daily downtrend in motion. Well, look at the amount of space on the weekly, guys. Anything above 519.50, just looking for a weekly higher low for continued market expansion. This market is looking absolutely gorgeous. No major red flags yet to speak of. The bulls in absolute full control of every single time frame. Moving on to the QQQs right now. QQQs, same concept, right? Beautiful daily uptrend right now. As soon as this move is topped out, and we are getting a tiny little bit overbought on the RSI, but as soon as it tops out, guys, tons of space created by the bulls. Anything above 476.50, just going to be looking for that daily higher low for the eventual trend continuation. Target this line right here as well, prior all-time highs, which could be lining up right with your 12 EMA. The 12 EMA is a great first touch line of defense. You can see the bulls have respected this pretty much since the dip that we had late April, early May. So looking very, very good for a little bit of a retest and maybe further run. And QQQ, same concept as the SPY, guys. Even if we were to lose this, look at the amount of space that the bulls have created now, looking extremely good on this weekly trend breakout right now. Any pullback just gonna be looking for a higher low, anything above 473 for that weekly higher low for continued trend expansion. The bulls in full control of absolutely everything right now, looking very, very strong. Now let's move on to another sector that is looking for a potential breakout. So financials not looking too bad at all. Had a little bit of a pullback here today, mostly due to some of your major banks. Just a quick reminder, your major banks start reporting their earnings already next Friday, guys. So big day next Friday. We have JP Morgan, Wells Fargo, and a couple others reporting. So that should definitely be a market moving catalyst. Now they're looking for the daily trend breakout here, guys. Looking for a break of 41.83 for that infamous daily trend breakout. Trying to set the daily higher low right now into these moving averages. So looking very, very good. Anything above 40.75. Looking for that daily higher low for the eventual trend breakout. Need to get over and above this level right here because that is pretty much your weekly level of resistance. If we can really blast past this, we'll really put to rest this most recent leg of selling right here, engulfing it really beautifully and creating enough space, guys, to eventually maybe retest this red box. This red box, I'll remind you, is just our previous all-time high resistance. So it would be nice to see the bulls use this as pretty much a breakout retest pattern of the range and then maybe run a little bit further. All in all, looking very good, guys. But as I said, this trend breakout will most likely be predicated on good bank earnings from next Friday. If for whatever reason we get lackluster earnings, get plunged back in this area right here, we'll let you, at least you know, guys, we do have a decent amount of space. Anything above 40.39, just going to be looking to set up for that weekly trend change once again. So I don't see any major red flags on financials just yet. I just keep reiterating, guys, that there's some decent opportunities in financials as of right now, guys. Visa is number one. MasterCard is another right there. You want another one? Look at Progressive. Progressive setting a really nice tightening monthly range above the all-time highs right now, looking for that breakout as well. Such a solid company, and a company, guys, that I pointed out on Wednesday's video too. Berkshire Hathaway, right, reacting nicely from a big range of support and looking for that breakout as well. So there are decent amount of deals to be had in the financials market right now. Moving on to XLV Healthcare. So XLV Healthcare finally putting in a nice day of rally to pretty much stop the last 7 days of bleed right there. So what the bulls have to do right now, guys, is we need to get a very decent bounce, right? Daily downtrend underway by the bears. So what we're going to be looking for here, guys, is the size of this bounce. So far, the size of the bounce is quite adequate with a 1-day move all the way up to about 38.2%. But for us to be really safe and get out of this downtrending channel, what we need to see is a stronger bounce, targeting probably around the 145 mark, which is a 618 retracement on the fib. If we can get all the way up to there, it gives the bulls enough space, guys, to really set up for the daily trend change, potentially using this area that we're kind of rejecting from right now as potential newfound support in the future. So that is the type of pattern that I'd like to see healthcare at least start to embark on to start reversing some of this daily downtrend activity. So we'll keep a close eye on the size of this bounce. In terms of the weekly, guys, the weekly still just pretty much a weekly uptrend as of right now. The bulls are really trying to set the weekly higher lows using the 26 EMA as that first line of defense support and looking to just expand this trend over the remainder of the year. Looking fairly good. Some of the deals in healthcare that I've been looking at most recently, guys, number one has to be my favorite company in healthcare. AbbVie is looking pretty decent, and even a company like Johnson & Johnson, which has been really struggling towards the low, those are really trying to set a local bottom in right now and potentially due for a tiny little bit of a bounce, not expecting too much, but could be a decent little swing trade opportunity down here in the lower 145 zone. So those are pretty much the two plays that I've been eyeing in healthcare. Healthcare looking fairly decent too. Now, in terms of semiconductors, guys, well, semiconductors continuing to push a nice little rally together. So daily uptrend is now back underway for the SMH after a little bit of consolidation and looking quite good here, guys. Daily uptrend in motion. As soon as this move has pretty much topped out, we're going to be looking for a higher low, anything above 256, looking for that daily higher low for the eventual trend continuation. If we pull back early part next week, guys, use this level right here. 264 lines up with the 12 EMA. Prior resistance, I know it's not the strongest one, right? But it's the only one we have above these levels. So maybe looking for the breakout, retest of the level, and maybe continue on for that rally up to the, up to the all-time highs. In terms of the weekly, also weekly looking very good too. Weekly higher low is now set at this same level right here, about that 255, 256 mark, and just looking for that continued trend expansion. Nice to see a few players that haven't really participated in recent history finally starting to come up, right? AMD, one of our players that we've been watching in this lower zone, finally starting to break up towards the upside right now, up about 5% today. And even Intel, the company that's been really left behind in terms of this whole semiconductor rally for the past 2-3 months at this point, right? Finally starting to show a little bit of signs of life, curling above the 12 EMA and the 26 EMA, looking for that daily uptrend breakout, looking to really start recapturing some of that ground that they've lost here on the weekly. So we'll keep a close eye on Intel. Could be a decent little opportunity for a swing trade on them as well. That's pretty much everything for semiconductors. Now let's dive into the Russell. So the Russell's still getting left behind a little bit, guys, and it's completely normal, right? The risk on trade is just not there. Just take a look at Bitcoin's price action in the last couple of weeks as well, and you can see the risk on trade is just not that prevalent right now, guys. People are still waiting patiently on the sidelines for that first rate cut to really give the risk on trade some legs, right? As of now, though, still a little bit out of favor. So unfortunately, we have lost the daily uptrend. Daily downtrend has commenced, which means that we are still in for a bit more weekly consolidation. Need to protect these lows right here, 197.61. Lose those, you end up in a weekly downtrend, and we start targeting one of my favorite areas for the Russell, which is pretty much the lower 190s. Think 192 all the way down to about 190. That's the location that I pretty much prefer on the Russell here. Still, the monthly, guys, just really sideways choppy monthly consolidation, cannot break out. We're kind of stuck between two locations, our huge area of congestion right here and this massive level of defense by the bears, that 212 area. So really just struggling between the two. No clear trend direction right now. The Russell's still trying to find a local bottom. At least we have a decent amount of support in this area right here, about the 200 all the way down to about 198, right? Acting as decent support over the last month of trade. So we will keep this one on the back burner. I'll remind you, my favorite location for this trade, the lower 190. 20s. If we get down there, I will be starting a position on the Russell. I do not have any positions as of yet. Moving on to the Dow Jones. Lastly now, the Dow Jones recovering pretty nicely, but still pretty much trapped in the last 2 weeks of trading, right? So I'll remind you what the Dow Jones is trying to do right now. Nice daily uptrend underway, and now just a little bit of sideways consolidation. This really looks like the SPY when we're trying to attack the all-time highs, right? Nice daily uptrend into sideways consolidation, and then we get the bull break. So very possible that the Dow Jones is trying to find a similar path, right? Nice daily uptrend, sideways consolidation, consolidating above our moving averages as support, looking for that potential breakout. We would need a break of 39,550 to really get that new leg of daily uptrend in motion and pretty much start attacking these all-time highs. On the weekly is also looking pretty decent, guys. Weekly uptrend still in motion, still looking for a little bit more legs on this weekly bounce to attack that all-time high, but I really don't see any red flags whatsoever. And even if we were to continue pulling back here, guys, we do have a lot of space created below us right now. This previous line of resistance should be support, and all of the moving averages are there too. So the bears are going to have a very tough time in trying to break this area, in my opinion. Now, that's pretty much everything for our indexes. Let's jump into a little bit of crypto, because crypto has really fallen down a lot, right? So there was a few liquidation events, right? We obviously had a few events here that are happening in the crypto market right now in terms of why Bitcoin is down so much. Number one has to be pretty much the Mt. Gox situation. So that was an exchange out of Japan, which pretty much went bankrupt in 2014. And ever since then, their creditors have been looking to get their hands on all this Bitcoin that they've been owed, right? And Mt. Gox has been paying out their creditors one by one. And as soon as the creditors get the money, well, they just dump the assets on the open market. So that's been the news headlines for pretty much the last 3-4 days. And also the government of Germany has pretty much been piling on the sales as well from their Bitcoin too. So all that leading to some price action to the downside, market makers most likely adding fuel to the fire as well, trying to take out all the stop losses of people who've been pretty much leveraged trading and putting stop losses down below these lows. A ton of liquidations, guys, over the last couple of days of trading. But all in all, guys, we need to remember the long-term thesis for Bitcoin, right? Why are we buying Bitcoin to begin with? Is it because it's a speculative asset that provides more returns than the S&P 500? Well, if that's your thesis, guys, that is not the best thesis to have, in my opinion. The true thesis for Bitcoin, guys, it's an insurance policy against the eventual erosion of the fiat system, which is a result of money printing from the US dollar. You guys have seen what has happened to exchange rates around the world in the last 20 years since money printing has really been accelerating. Every single other currency has been losing pricing power almost on a yearly basis against the US dollar. This crypto coin right here is the one true hedge against that mechanism, right? So that is the long-term thesis for Bitcoin, which is why I am adding some Bitcoin at these levels. Keep in mind, though, however, in terms of the technicals, yes, we are now in a daily downtrend flush pretty much, and we will be looking at this point for maybe a lower high using the lower bound of this resistance area now and the 200-day moving average maybe as a bit of resistance to potentially revisit these lows. We're going to keep a close eye on when the bulls can reset this into a daily uptrend. Only then will you know that this weekly move is finished pretty much and that we are maybe due for a weekly bounce. So keep a very close eye on the daily uptrend shift. As I said, I've been nibbling a little bit on Bitcoin right here, but as of now, it is a confirmed weekly downtrend as well. And it is, unfortunately, now a confirmed monthly downtrend too, something we really have not had here, guys, since pretty much the sell-off of 2021 into 2022. But all in all, I do think that it's a relatively healthy monthly downtrend. Just looking to retrace a little bit. Keep an eye on this level right here, guys. 51,000, 50,000, which is pretty much the start of your 12 EMA. And we do have a very big level coming up too, all the way down here, a little bit lower, about 46,000. I will be adding to my position this entire way down, no matter how far we fall, because my long-term thesis is for Bitcoin to be a high six-figure asset. So these prices are very generous currently. So all that considered, that's pretty much everything for Bitcoin. I will continue to add, even though we are in oversold conditions, even though we are in a weekly downtrend, I still think it's a great opportunity to be building that long-term position in Bitcoin if you share the same long-term thesis as me. Now, moving on to Ethereum. Ethereum also really collapsing over the last few days, right? So daily downtrend was always underway for Ethereum, and now it just got significantly worse, right? Huge liquidation break event, really blasting through our most recent area of support for the bulls, and now really retesting the lows right down here, right? Retesting our 2800, 2700 levels, which is the next line of defense. So the bulls trying their best to hold up the bids on Ethereum. However, not looking the best, right? Such a big move down. We're going to need a heck of a bounce by the bulls to try and reset this daily uptrend in motion. So far, no indication of that. Still trying to find a local bottom for Ethereum. In terms of the weekly, guys, as well, weekly pretty much entire engulfing move of the most recent weekly uptrend. Not looking the best for the bulls at this point. The best that maybe we can do is just develop into a tightening range. These are risk on assets, guys. If you don't see the Russell running, you will not see crypto running as well. They've had a tremendous rally this year so far, but now pulling back because they are part of the risk on trade, and it's just not that favorable right now. In terms of the monthly also in jeopardy of losing the monthly uptrend and maybe coming back down and retesting our lower levels. $2,600 down to about $2,100, guys. This is a gift. If ever they give it to us, in my humble opinion, it is a gift for a long-term recapture of this trend later on in the year when rates really start coming down. But we have to be patient with them, guys. Crypto at this point, I'm pretty sure that people who are just long-term holding are going to outperform people who are trying to swing trade off of these news-based events, right? So still not looking the best for Ethereum right now. I will agree with you, but I have added a little bit of Ethereum yesterday on the dip as well in the lower 2900s, and I will continue to add as long as we're in the 2000s. I think it's a great location to be building a long-term position. I do not have the same thesis for Ethereum on the long term as Bitcoin. In my opinion, Bitcoin is going to be the king of crypto forever. However, Ethereum will probably follow, right? So if Bitcoin goes on a tremendous rally later on in the year or 2025 all the way up to 100,000, I think Ethereum will follow. But at this point, guys, I'm probably going to cut my position when we do come in to the $5,000, $6,000 range, just because my long-term thesis is not the same on Ethereum as it is on Bitcoin. So hopefully that helps. Now, let's move on to our big tech names, shall we? So Apple on an absolute ridiculous tear right now, continuously pushing the levels. It seems as though only yesterday, guys, we were pretty much at the 170 levels, right? And everybody was saying, well, Apple's a dead company. Their revenue isn't growing, no new product lines and everything. Well, here you go. Apple proving everybody wrong once again, as they do time and time again, right? So just goes to show, guys, that Apple is extremely strong, remains one of the strongest companies still in the market right now. Daily uptrend, so healthy right now. So much space created as soon as this move does top out. Looking for a daily higher low, anything above 210, just looking for that daily higher low for further trend continuation. Target your all-time high prior resistance level. If we do start pulling back into this level, prior resistance going to be newfound support, and your 12 EMA is going to be curling up into this location right there. And you can see Apple respecting this 12 EMA ever since we started this rally back in the late month of April. So looking very strong on Apple. No red flags whatsoever. The bulls in full control of this weekly as well. Higher lows are set pretty much 207. So tons of space for a weekly pullback even at that. Looking extremely strong. It's just I really can't touch Apple up here, guys. It's run a little bit too much in my opinion. And the peg ratio now, well, at 214 it was a little bit high, and now it's even higher. Not one of the best deals in the market in my opinion. Moving on to AMD right now. AMD with a very nice breakout, guys. They are trying, right? We tried to get above the 172 level, but couldn't get it done, but that's okay. Very nice momentum. Daily uptrend is underway for AMD, now healthily above all of our moving averages and healthily above this red box of congestion that's really been plaguing us down, right? For the past pretty much month and a half of trading at this point, really starting to break above and getting some legs. So in the event that we need to retrace right away, guys, tons of space created. Anything pretty much above 155, going to be looking for that daily higher low for the continuation of the trend expansion, maybe taking us right up into the mid 180 level. Obviously, they don't need to retest it right away. They can just simply blast all the way up into the 182 right away and maybe pull back from there and then use these highs as a little bit of comeback on support, right? 170, that could also be a likely scenario. All in all, the bulls looking like they do want to reestablish control in this name, and this is coming prior to their earnings, right? Earnings coming up in pretty much about 3.5 weeks time for AMD, looking extremely good for the breakout here, guys. One thing is for sure, if early next week we start pulling back down in here, I will be writing short puts all day in the lower $160 range, looking extremely strong for that breakout. And even on the weekly, guys, look, finally looking like they want it. Strong weekly close. If you get another strong green weekly close, finally, nice weekly uptrend mode right there, and looking finally for this continuation of the monthly trend expansion. So AMD is looking very good in my humble opinion. Now, give me a quick second. All right, so let's do Amazon. So Amazon up another 1.22%, literally fracturing the all-time highs by a few pennies once again. So very nice day of trading for Amazon, still in this very nice daily uptrending motion right now. Keep in mind your daily higher lows are very, very close right now for the bulls, right? So pretty much right here, 196.57. If they were to lose that level, daily downtrend is underway. And then unfortunately, we are due for a little bit of weekly pullback on Amazon, but you can see how much weekly space the bulls have. Anything above 174, looking for that weekly higher low for further trend continuation. If Amazon does pull back into this range right here, 190, 189, I will definitely be bidding this location for the potential trend continuation. The bulls are looking excessively strong on Amazon. I would not be surprised if they don't even retest that area and just launch to new highs over the course of next week. 205, 210 can be a very decent target for the next 2 weeks of trading. No major red flags to speak of. And as I said, if we start retesting these levels, guys, look how strong this level has been. Going to be an easy touch and go for the bulls, in my opinion. Moving on to Google right now. Google, another excessively strong day, 2.44%. And now Google looks like it wants to go for that 200 psychological level. That's going to be the next level of resistance for them. Looking extremely strong, though. Look at the bulls, guys. Extreme support down here at this lower level, 182.57, looking very good. So in the event this move tops out, looking for a daily higher low, anything above here, going to be looking for that daily higher low for the continuation of the trend expansion. Always target your prior resistance for that newfound support, and the 12 EMA should be curling up in this location right here. So juicy little swing trade setup, maybe the 187.5s. Google is looking extremely strong here, guys. I haven't done the valuation at about the 191, but let's say just it's about 10% higher than the last time we did it, right? So this PEG ratio should maybe be sitting about 1.5. Definitely not the worst for Google. Looking extremely good, and the valuation is still relatively attractive for this company. So I really, really like this stock. It's one of my favorite players in the game right now. Their YouTube business is just doing excessively well, guys. So looking very good, even on the weekly, full bull control. No red flags to speak of just yet, guys. So Google, one of the stronger names in your big tech list. Moving on to Meta right now. Meta, another big tech name, just breaking through to new all-time highs. Look at this strong day on Meta, guys. 6% to the upside. I have been saying this entire time that Meta was a buy ever since after earnings. So hopefully you guys were able to pick up some shares as well. Now, keep in mind the valuation at about 500 wasn't that bad. Now we are roughly not even 10% higher. The PEG ratio should be about 1.35 right now. Still an extremely attractive deal, even if we are at the all-time highs. So let's take a look at the technicals here, guys. Looking very nice, daily uptrend back in motion. Clear uptrend by the bulls right now. As soon as we pull back, when this move tops out, looking for a daily higher low, guys. And now we get to use this red box, which I should pretty much use as an area of support right now. The bulls are going to be using it as big support to maybe get another daily leg underway. Your next target of resistance, guys, has to be the 550 psychological level, and we are pretty much almost there. So the bulls looking excessively strong. If we were to pull back here, guys, classic breakout retest trade. Breakout, retest of the range. This could be a very juicy trade entry opportunity. Stop loss goes below the lows, and then we're pretty much riding this one for the remainder of the year. So looking very strong on Meta at this current time. Even on the weekly, guys, the weekly, look at this chart, guys. The weekly looks gorgeous on Meta. Beautiful weekly trend expansion now for leg number 3 after the earnings collapse. So looking extremely strong. Bulls in full control of every single time frame. No red flags at all. So congratulations to all of you who were able to pick up some juicy shares after that earnings mishap right there, which I was saying, guys, this was such a big mispricing event. Now, moving on to Microsoft. Microsoft, another of your big tech names, just smashing through to new all-time highs. Another 1.5% for Microsoft. Look at this juicy daily uptrend by Microsoft. Picture perfect, in my opinion. The bulls creating so much space right now. Yes, we are daily overbought. Even if we do pull back, guys, tons of space, anything pretty much above 446. Looking for that daily higher low for the continuation of the daily uptrend. Looking very good. Previous resistance should be right here, which is going to be newfound support for the bulls, and the 12 EMA going to be pulling up in that area even as well. Even if we were to lose this, guys, right, over the next couple of weeks of trading, let's say big tech pulls back, so much space created on the weekly. Anything above 404, looking for that weekly higher low for the eventual further trend continuation. So no red flags at all. Tough for me to add Microsoft at these levels, especially due to their valuation being a little bit rich, a little bit more rich than a lot of other names that we have in this list right now. So tough for me to add right here. I would be a little bit more patient. If we do get a retest maybe of these lower levels, 440 down to about 430, I don't know if it's going to happen, guys, but if it does happen, that's going to be where I'm going to be looking to bid Microsoft myself. Now, moving on to the next one, Netflix. Netflix looking very juicy as well. New 52-week high from them, but not yet a new all-time high. They almost did it, guys. 697 on Netflix. The prior all-time high is right here, which was about at 701. So we're almost there at the all-time highs here, guys. Shouldn't be long before the bulls do actually start really breaking through that. So looking extremely strong, tightening range on the daily, looking for the breakout, and they got it. So daily uptrend back in motion by the bulls right here. As soon as this move is topped out, keep an eye, guys, on the $700 psychological break. If they do break that, I think they will get a little bit more legs, maybe up to 710, 720 before maybe pulling back. So something like this could be maybe in play right then, right? So we're looking for maybe the breakout and retest of this range once more before running, right? So break out of the all-time high, retest of the all-time high, and then run could be a very juicy trade setup. So looking extremely strong are the bulls right now. Right, anything pretty much above 663, looking for that daily higher low for further trend continuation in the event that they can't really break out and do this trade setup. Instead, the bulls in absolute full control of Netflix, and Netflix valuation as well, guys. Really good. I haven't done it since, well, we've done it at pretty much 684. It's about a 1.62, looking very decent on Netflix, guys. Nothing bad to be able to say about the company. Company's subscriber count has never been higher. Their advertising tier has been performing excessively well, and their free cash flow is growing very large. So looking extremely good on Netflix. Now moving into NVIDIA. So NVIDIA consolidating a little bit on the day, but that's okay, guys. NVIDIA does have a decent amount of space to work with here, right? So what are we looking for on NVIDIA? They were trying for the daily uptrend breakout, but we barely got it before pulling back a little bit more, right? So one of two things is going to happen here, guys. Either the bulls are going to start running away with this into next week, daily uptrend will be underway, and our weekly higher lows are set, and we're just due looking for another weekly leg higher, or the bulls maybe just have to consolidate a little bit more, right? We do have a decent amount of support left below us. That's pretty much our 119 down to about 115. This level right here was previous support for the bulls, looking like a strong area, but you guys know the drill, right? Sometimes NVIDIA can break up to these new all-time high levels and then just consolidate for a decent amount of time. So I'll remind you, NVIDIA doesn't really have earnings until the midpoint in August. So they do have a decent amount of time that they could be able to consolidate sideways if they really chose to, which is not a bad case scenario in my opinion. So we'll keep a close eye on this price action. The one thing that maybe you wouldn't want to see, guys, is a break of 117.56. If we really get a break of that to the downside, it could be argued that we are in for a weekly downtrend, and that will be the first weekly downtrend on NVIDIA in a very long time, pretty much since all the way back here when they barely set the weekly downtrend, right? So we'll be keeping a very close eye on this level right here, 117.86. As of now, no red flags, just a little bit of a healthy pullback day for NVIDIA. Can't really speculate too much as to the future because the bulls are still in full control of every single time frame, and I will still be playing NVIDIA. Every time we dip down to this location right here, I'll be looking to sell puts 112 down to about 110, which is the area that I really like the stock at. Moving on to Tesla right now. Tesla, again, 2.08% to the upside. Tesla, for a grand majority of the morning, was actually red on the day, pulling a little bit back, but you can see how well in control of this hourly chart the bulls are, right? So gorgeous hourly uptrend. This move will only be topped out when we lose the hourly time frame into an hourly downtrend. Then you know daily consolidation is underway. But as of now, the bulls really look like they want to start attacking the higher level, the 260s right here, which is a big zone of resistance for them, right? May want to tackle that before maybe pulling back a little bit more. And where can we pull back here too, guys? Look at this level right here, talking about 242 down to about 228. Seems to be a good reaction zone from the bulls. I can even extend this a little bit further, right? Has been a previous area support, congestion, right? I know it's not the prettiest location, but it's the closest one we have. And the bottom end of it really lines up with our, our pretty much years worth of downtrending channel at this point. So looking very good. The bulls in full weekly breakout mode as well. So they do have a very large amount of space below us in the event we do start to pull back. RSI is at 85, a little bit high on the daily, even on the 4 hour here, guys. Really elevated RSI once again at 85. So the pullback could be due after maybe another little rally into 260. That's maybe when we may find a little bit of daily consolidation and maybe a little bit of weekly consolidation as well. But all of that would be relatively healthy, guys. Looking very good on Tesla. Congratulations to all the bulls out there. If Tesla does start to pull back a little bit, I'll probably be playing some short puts, maybe about 230 down to about 220, as I really do believe the sentiment bottom is definitely in for Tesla. And now lastly, Palantir, guys. Palantir exploding to the upside, 5.34%, looking extremely strong. And now we finally have a chance at attacking this $28 level that I've been pretty much harping about for pretty much the last 6 months of trading on the channel, right? I've said that Palantir has a very good chance of attacking the 28 over the course of this year. And I've been saying this since we've been buying this dip down at about $20, looking very, very strong. Daily uptrend clearly still in motion by the bulls right now. Any move lower, just going to be looking for a daily higher low, anything above 24, looking for that daily higher low for the continuation of the trend expansion into this $28 level of resistance. Looking very strong on the weekly, looking very, very strong as well. Gorgeous weekly uptrend, tons of momentum. Weekly MACD curling over to the upside. That is a very big one. And the daily RSI, guys, not even overbought. So the bulls do potentially have the juice to just break this 28, use it as support, and maybe continue running and start even tacking the higher $30 levels. Don't want to get too far ahead of ourselves, but they're definitely looking extremely, extremely strong. If in the event we use the 28 as resistance and really set a daily downtrend in motion, a little bit of consolidation, guys, so much space, anything above 20.6, just looking for that weekly higher low for further trend continuation. At this point, guys, I have to be targeting 24.50 all the way down to 24. That's going to be an area that I might be looking to play on Palantir if ever we do revisit that. Just be patient, let the market come to you. Try not chase these stocks. So that's pretty much everything we had for our daily market recap. Now let's jump into my portfolio for a few trades made this week. All right, guys, so taking a look at the portfolio, at a quick glance, you will see that there is a lot of positions. Now, don't get overwhelmed by this. All of these positions are pretty much credit plays for options, meaning that we write them once and then we just pretty much forget about them. There's really no day-to-day management of these. I do have a few long call positions in here, but you'll see that they're really not that big. So in terms of the portfolio, guys, there's only 2 short put plays that we came into the Friday session with. Most of everything was closed on the Wednesday session for deep amount of profits. So not getting assigned anything this week. Today was just a very good week of just pure profit premiums. Now, that's pretty much the one that we wrote on Wednesday was Amazon. We went with the 195 short puts for about 39 cents here. That was pretty much when Amazon was trying to give us a little bit of a back test here on the prior Wednesday session right here, a little bit of a red day. You can see we came down to 197, and I was looking for maybe the 195 puts as a line of defense. If I would have gotten assigned this week, guys, I really don't care. It's Amazon. I think this one is going much higher, so it's just looking to ride the wave there. But pretty much this one ending up with all those $40 in our pocket. Not that big of a trade, but just something that I chose to spend the buying power on. The only other short put play for this week that we had remaining was Elf Beauty. Same logic. Wednesday afternoon was looking for a little bit of plays, something that was a little bit down on the day, and you can see Wednesday's day of trading was right here, sitting around the 202 mark, and I was looking really for the 192.5s, which is pretty much this location right here, just looking maybe for a little bit of a weekly bottom in the stock process right now, lining up with this 192 mark. That's why I pretty much chose this trade, 192.5s for Friday. I was willing to take assignment on those, but pretty much ending absolutely worthless, all of this premium in our pockets. Now, the rest of everything, guys, has been trades that we've really seen on the channel in the past, right? Take a look at the Amazon, the short calls right here. That's pretty much together with this trade down here, right? We had the Amazon leap calls for June 2020. Essentially, the only thing that I'm doing is a delayed poor man's covered call. I was just looking to protect a little bit of gains leading into last week, maybe for a little bit of QQQ consolidation. So we're up a very decent amount on this call option right here, about 48% on this entire call option position for next year's trading. So what I chose to do is I chose to cover those a little bit by writing pretty much the Amazon $180 calls, short calls pretty much a month out, right? Just looking to protect a little bit of gains. So we're pretty much down on those, but it's okay, guys. I will wait until this expiry. And if ever, the same thing for CRM, which we have down here, if ever Amazon stock is pretty much well above a premium received, so above 198, I'll just have to close this position and close the leap call in tandem and just collect the profits that I gained on this position so far, about $1,400 between the two. So looking pretty decent. The same thing for these CRMs, right? So I had the CRM leap calls down here, 240 calls, and we were up very, very nice on them, almost about 64% as of the current date. So leading into last week, we chose to cover those for a potential QQQ pullback. You can see we got about almost $16 for those, and those are for the 245s. So our average pretty much right now is about 261, let's call it. If CRM ends above 261 on August the 2nd, I'll just close this position, close the leap call as well, guys, and we'll just collect all of those juicy profits at the same time. So just looking to protect the profits, still another month's worth of trading on those two options. Now, these ATDs, I was writing those alimentation short puts pretty much last week, right? We got assigned at $77, this red line right here. And all we did, guys, is pretty much write covered calls against the position at $77. We collected a decent amount of premium, $61 for it, and now we get called away. So this position with these shares right here will be called away. They will not be in the portfolio. So another nice wheel trade win for us. Now, another one down here, guys, Square. So we got assigned Square earlier on, about a month ago, right, at $68. Ever since then, we've been writing premium aggressively on them, and I'm happy to say, guys, our average cost on Square is now down to about $63. So in the event, yes, I did write short puts under my assignment price, just looking to collect a bit more premium. If ever we get called away on Square at $66 by next Friday, well, one of two things can happen. I may have an opportunity to roll for even more premium over the next couple of weeks, or we just get called away at 66, and that's pretty much everything for the trade. We collect $300, regain all of the buying power, and just move on to anything else, right? So even after being assigned the stock for about a month in time, writing premium all the way down here, we are now having a very nice average cost at around, around the just under $63. So if we do collect that $300 in premium, I will be very, very happy with that. So all in all, another wheel trade that is performing very, very nicely. Now, Visa, same thing. We have Visa covered calls. That was just an assigned position. We got Visa at about 265. Once again, I went a little bit conservative. I wrote covered calls under my assignment price, but we got a very juicy amount of premium for them. So if we get called away at 262.5, guys, we're going to make roughly about $175 on the stock, even if we are writing below our assigned cost. So I'm going to be happy if we do get called away on Visa next week. That's going to be a few positions that we just get out of and regain all the buying power. ATD, Square, and maybe even Visa getting called away next week. So looking very, very good, very solid profits on this stock. Yes, I could have been a little bit more aggressive waiting for a Visa bounce and writing the 265s, but I just didn't want to take any chances here, guys, leading into all-time highs on the S&P 500, right? We could have had a potential weekly pullback, and that was maybe the event that I was looking for, which is why I played it a little bit more conservatively. But all in all, can't be mad, guys. Profit is profit, right? Now, I did have a little cheeky play here, the Amazon 2025 calls. These are just straight calls for next week. I'm looking for some Amazon expansion into the 205, 210 level over the course of next week. And if that does play out, guys, I may be looking for a 2.53x on these calls. So I do have a tentative take profit limit set at about $3.20 for this one. So we'll see what happens. They got up to all the way to about 230 today. So looking pretty good on these. I will hold these. These are for next Friday as well. We also have the CELH. I've had these for pretty much a month of time right now. Pretty sure these are going to end worthless. But if in the event CLH, which has been left behind for pretty much the last month worth of trading, if we get just one good week where CLH, you guys know CLH can put in a 10-15% week. Look at these right here. If we get a little bit of a bounce here, maybe into the mid 60s, I should get a little bit more premium on these calls right now. If I can sell them for maybe $100, $150, just cut the loss a little bit. That would be a decent strategy that I'll be looking to run. All in all though, guys, every time I do take one of these long call options, I'm ready to lose the entire position, right? So going to be patient with this one. We will definitely see what happens. And then obviously we still have the Nike calls, right? Nike straight calls, $80 calls. Just looking for a little bit of recovery on Nike here, guys. I keep bringing up the chart from Starbucks. All I'm looking for, guys, is just a little bit of trend recapture for Nike, bringing us back maybe into the high 70s, low $80 mark, similar to exactly what Starbucks did. It took them a while after their earnings to get it going. That's why I gave myself a lot of time on this option, October 18th. So we're down on these a little bit. We paid $331 for them. We'll see how these goes, but I'm definitely looking to hold these for a while. And then we obviously had a lot of swing trade positions here, guys. MELI took those pretty much on the Wednesday session prior to making the video. And you can see we are now up very nice, a nice 5% gain on MELI. Love this company, love the valuation. And I really do think, guys, that they are going to start going on a heck of a rally for the remainder of the year. So that's a very nice trade. We also have the EVVTY, Evolution AB, one of my favorite casino and gambling plays, just because of their high net margins. Essentially what we're looking for here, guys, is the continuation of the potential monthly trend expansion, bringing us back into maybe the high 130s, 140s. just a little bit of swing trade with shares, right? Only 30 shares, guys, at 104.13. We're already pretty much up $2.50 on those, so I will ride those as well. These probably called away. Square also next week, maybe called away. Visa as well. We do have the Vici swing trade too, so all of you who have followed me into Vici, I am still in this one as well, and will continue to add on this stock as one of my favorite REITs in the entire market right now, just really hovering around our big area of support, continuously a very beautiful area to continue to add shares. Yes, eventually we want to see that pop back into the $30 level, but guys, we really can't complain because the entire time that we're in this at the lows, it's paying a 6% dividend. So looking very strong. I still love this play. And then we obviously have our SoFi shares. We got caught a little bit in this one, still not high enough to be writing covered calls. Our average cost on this position after writing covered calls for a few weeks after being assigned at 7, our average cost is around $6.70. So really not that far off of our pretty much off of profitability, but still would like to see SoFi go on a little bit of a run soon. And then guys, we have, these are my Canadian banking shares that I always show. And then we have a bunch of credit spreads. Now, these credit spreads are very simple, guys. I always do the exact same thing. Credit spreads are very easy to use, but you have to know how to use them properly. Once again, when we're targeting credit spreads, meaning we are writing a put credit spread, we always want to be looking for a stock that has relatively bottomed on a weekly chart, because we have to be writing these things close to get our premium minimums. Every time you see me write a short put spread, I'm always looking for 1/3 of the width of the spread. So take MasterCard here, for example, right? We have the August 2nd 440s versus the 435s, right? So that's a $5 spread. What we always want to be looking for, guys, is 1/3 of the width of the spread. So you can see here, I got a $1.75 credit on those. $1.75, let's just do $175 divided by $500, which is the width of the spread. You can see it is above our 1/3 rule. You need to see about 33% here, and we're getting about 35%. So all of these pretty much do respect that rule. And once again, where are we looking to take these trades here, guys? Why do I use put credit spreads? If ever we don't have enough buying power to just write short puts, naked short puts, right? A naked short put on MasterCard would be about $44,000 at these levels. So another real easy way to swing trade this is either, well, obviously we can go straight call options, but those two can be expensive sometimes. We can either use call debit spreads or put credit spreads, right? Put credit spreads is just farming premium, right? So that in motion, we have a bunch of them, guys. I'm not going to go through each one of these charts. You just need to understand that every one of these charts is in a similar setup, right? Bottoming out on a weekly setup, and we're looking for a bounce. So you can see I have the Ulta Beauties. I've had those for a while now. This is a $250 spread, so I didn't quite get our 33% rule on those, but it's okay. I still like Ulta Beauty around these levels right here. And we also have a bull call debit spread. So it's a very cheap way of doing a call option. $395 versus $400. We will maintain these if in the event Ulta Beauty goes on a run above 400s. These should pay quite nicely. MasterCard now decently in profit, 22%. Visa, same concept, put credit spread. They are up 16.5%. ASML, we wrote the 980s versus the 975s. Those are up a healthy 50% so far. ASML really starting to break out here, guys. I wrote these here on the Monday session, and we've gone up. And only up since then. My spread is all the way down here. We should probably be able to close these relatively shortly. Got a decent amount of credit on those, so we'll see what happens. AMD, we actually had a bull call debit spread. 2 of them, as a matter of fact. One here for August, 165 versus the 170s, and the AMDs here for October, 165 versus 170s. Looking for the pop rather than going with straight call options, I chose to do a debit spread, and they are paying off nicely. You can see my average cost on those is $1.92 and $2.06. The maximum payoff is the width of the spread, $500. So the maximum payoff, if you pay $200 and the maximum payoff is $500, you obviously understand that your maximum profit is $300, right? So got these, and they're well in motion, guys. 39% on those, and down here about 20% on these. So looking very good. We also did a put credit spread on Meta. So Meta as well, right before the breakout here, guys. We wrote these just the other day on Meta. Meta as well, we wrote them right here, guys, Monday at the lows of the session, and now boom. So we should be well and clear of these 490 versus the 485s. Looking very good there. 34% profit. And then we have AbbVie as well, one of my favorite healthcare plays. Wrote those at the lows again. then on pretty much the Tuesday session, it dipped a little bit lower on Wednesday, and now we're up. So looking very good on those, really coming into profit, 22% profit on these right there. And then we did the same thing on Pepsi, 160 versus the 157.5s. Put credit spread once again. Very, very easy, guys. These things are so cheap, right? How much is the buying power effect on you? It's the width of the spread, right? So if you're looking at this 162.5 versus 160, it only costs you $250 in buying power to put these on, right? And you gain $64 in the process. Such an easy trade. Pepsi, I have two of them, 160 versus 157.5. Pepsi, same thing, guys, just looking to pick these bottoms on all these stocks. And since I don't have enough buying power, guys, to take all of these plays individually with only short puts or maybe even long calls, which is a bit more risky, I'm just using credit spreads to just farm more and more premium, right? There's over $1,300 of premium right here, and it's such an easy play to make, and you put a little bit more time on them, and you can see how well they perform. So these Pepsis are for next Friday. They're a bit close, got about 43 cents for them each. Not the highest, but I really just like the setup on Pepsi. To be at a loss on this, I would need to finish below 160, which I don't really think is the case, even though they do have earnings coming up next Thursday. I'll try to close these prior to earnings. Now, the last one, Berkshire Hathaway, another play that I gave the other day, right? You can see here, another put credit spread, 400 versus the 395. This one also is for August the 2nd, and we are still up about 42% on those after only 2 short days of trading. Berkshire Hathaway, we really took these almost at the low of the move right down here. We wrote these pretty much on the Tuesday session at the bottom, and now they have really rallied hard. So looking very, very good. All of these credit spreads or debit spreads are performing exactly how I wanted them to. So I know there's a lot of positions, guys, but you just need to understand they're extremely easy to manage. I don't have to touch any of these pretty much ever, right? I just watch them, and as soon as they come into nice profit, you just close them and you just let the time decay do the rest, right? So very, very easy portfolio strategy that I'm running right now. Most of them, guys, is just farming premium using different tools. So hopefully all of that makes sense, guys. If you enjoyed today's video, that's all I had for you. If you did enjoy it, consider dropping a like for the growth of the channel. Would really appreciate it. Also, consider subscribing to the channel if you're new. We do these videos every single Monday to Friday after the close. So hopefully I see you back for more of them. And then lastly, guys, if you have any questions at all, please leave them down below in the comments, and I'll be sure to answer you within the first 24 hours. Anything you want me to look at a stock, technical analysis, an options play you're considering, macro discussion, anything you want, leave it down below in the comments, and I'll be happy to engage with you. So take care, guys. I'll see you tomorrow for 2 videos. The energy video that I unfortunately did not have time to put out yesterday. Apologies for that. It will be out tomorrow. And then we're also going to do a subscriber request video and then our top 5 options video on the Sunday session, guys. So looking forward to seeing you back over the weekend. Take care and peace.